But on that note, let's move on and talk about some global stories. And the US economy held steady, growing at an annualized 2.3% in quarter 4. 2024, bang on the target. But inflation, well, a little hotter than expected, with the GDP price index trickling up 2.4%. And if that wasn't enough, your core PCE has climbed to 2.7% on a sequential basis, keeping the Fed on its toes. Remember, the expectation was 2.5%. Meanwhile, the job market is showing signs of fatigue as well, because weekly jobless claims have edged up to 242,000, while continuing claims hit 1.86 million. So with growth on track, inflation creeping up and jobs softening, all eyes are going to be on the Fed Reserve, that is largely expected to remain cautious around rate cuts going ahead. But let's focus back home and talk about what happens to our GDP today, because all eyes are going to be on our quarter 3 GDP numbers. The IMF has come up with a note, and IMF sees India's economic risk rising amid global uncertainty. It also says India should implement crucial structural reforms to realize its ambition of becoming a developed country, and intensification of regional conflicts, volatile commodity prices, and weakened international cooperation and cyber threats are some of the crucial factors that the IMF has highlighted that can pose a risk to India's growth. But with the specter of Donald Trump's tariff tantrums looming, the European Union is making its move, urging India to slash steep import duties on cars and wine in a bid to sweeten trade ties. The timing is no coincidence, because just as European Commissioner President Ursula von der Leyen prepares to touch down in India for high-stakes meeting with Prime Minister Modi, what's going to be their pitch? In exchange for India easing up on European luxury imports, Brussels is offering agricultural concessions that could finally push forward the long-stalled free trade agreement. If sealed, this could be India's biggest ever trade pact, one that supercharges exports of textiles, leather and marine products, while making a bottle of Bordeaux and a BMW a little less painful on the wallet. But let's move on then, and the tariffs which were just put on hold last month will now come into effect from 4th of March, as per US President Donald Trump's latest Truth Social post. Blaming China for the lack of improvement in drug supply into the US, Trump shared that the dragon will also face an additional 10% tariff. The imposition is in full force from the 4th of March, and reciprocal tariffs are in store commencing from 2nd of April.